You mentioned we're in a big bubble. Can you elaborate on that, and how is this likely to play out?
Well, I think eventually there'll be considerable trouble because of the wretched excess. That's the way it's usually worked in the past. But when it's going to come and how bad it will be, I can't tell you.
That was Charlie Munger, and those are scary words. That was filmed in February 2022, very, very recently, and seems to be a prime prediction of what is actually happening. Excessive stimulus and COVID shutdowns have caused the S&P 500 to drop. In fact, stock markets all around the world are dropping. Inflation data is going through the roof, and the Federal Reserve and many, many other central banks, the majority of them, are dramatically raising interest rates as a way to try and combat inflation. Our money is literally burning up before our eyes. Are things getting better or worse? This war in Ukraine appears to be far from over. Soaring energy prices throughout Europe only seem to be getting worse. The UK banking system appears to came within a hair's breadth of a margin call. And China is going into a recession caused by a plummeting property market. And China has 800 million more men than women of prime fighting age, an excess resource that most countries do not want. They have a recession on their hands, and the best way to get out of a recession is to go to war. But the war is only speculation. Let's look at the facts we actually have. We have soaring inflation and rising interest rates. Has this sort of thing actually happened before? Well, back in the 1970s under Paul Volker, this did in fact happen. So let's go have a look and see what Charlie Munger has to say about that.
What are your current thoughts on the inflationary environment, and please compare and contrast it to the 1970s?
When Volker, after the 70s, took the prime rate to 20% and the government was paying 15% on its government bonds, that was a horrible recession. Lasted a long time, caused a lot of agony. And I certainly hope we're not going there again. I think the conditions that allowed Volker to do that without an interference from the politicians were very unusual. And I think in 2020 hindsight, it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new Volker to get that tough with the economy and bring on that kind of a recession. So I think the new troubles are likely to be different from the old troubles.
This is related. These are all.
You may wish you had a Volker. You may wish you had a Volker-style recession instead of what you're going to get. The troubles that come to us could be worse than what Volker was dealing with, and harder to fix.
Like what? Have you
think of all the Latin American countries that print too much money. They get strongmen and so forth. That's what Plato said happened in the early Greek city-state democracies. One person, one vote, a lot of equality, and you get demagogues, and the demagogues lather up the population, and pretty soon you don't have your democracy anymore. I don't think that was a crazy idea on Plato's part. I think that accurately described what happened in Greece way back then, and it's happened again and again and again in Latin America. We don't want to go there. At least I don't.
I certainly hope we are not going there again. Conditions that allowed him to do that without political interference were very unusual. You may wish you had a Volcker-style recession rather than what we're going to get. Those are some very scary words from Charlie right there. In fact, I had to listen to it a few times before I really got a grasp of what he's saying. Like, I'm genuinely horrified that this is our monetary system. Inflation is so bad that, yeah, in the next clip, we're going to see what he's talking about.
Conventional economic theory argues that excessive monetary and fiscal stimulus over the last 2 years has triggered the highest inflation in 40 years. Do you broadly agree with this thesis? And more importantly, do you think there will be a high economic price to pay as the Fed attempts to bring inflation back under control? I guess the reasons for it.
Well, the first part, I agree with it. We've done something pretty extreme, and we don't know how bad the troubles will be, whether we're going to be like Japan or something a lot worse. And what makes life interesting is we don't know how it's going to work out. I think we do know we're flirting with serious trouble. I think we also know that some of our earlier fears were overblown. Japan is still existing as a civilized nation, in spite of unbelievable excess by all former standards in terms of money printing. Think of how seductive it is. You have a bunch of interest-bearing debts, and you pay them off with checking accounts, which you're no longer paying interest. Think of how seductive that is for a bunch of legislators. You get rid of the interest payments and the money supply goes up. It seems like heaven. And of course, when things get that seductive, they're likely to be overused.
Low interest rates, excessive stimulus, excessive borrowing. Things will be bad, but perhaps not as bad as our worst fears. Let's watch the next clip about how Charlie recommends that we should invest in the troubles to come.
How will this all play out, and what's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities?
It may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision making. And the Mungers have Berkshire stock, Costco stock, Chinese stocks through Lilu, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of, you're lucky if you've got 4 good assets. I think the finance professors and that sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer. It's very few people can have enough brains to get 20 good investments.
So Charlie says to invest in the least bad. Those are comforting words, I must say. I'm a bit lost on what to do there. So right now is look out for the least bad. Excellent.